The goal of any portfolio is to make as much money as possible. And for me, the goal is dividends. Getting as many dividends as I can as quickly as I can, especially as a college student. So here are my dividends for the year. In 2019, I made $20.74 in dividends. The next 2 days coming up, I've got dividends coming through, but I know exactly what those are going to be and how much they're going to pay. So as we can see, I started in March with Ford. I had one share and received a dividend of 15 cents. Moving down, next dividend I had was in July. At first, I wasn't too sold on dividends, and the more research I did, I've decided that dividends are probably the best way to go. So that next one was Medical Properties Trust, and I did end up selling that share as well as Ford, but that was really my start, I would say. So the next one after that was Four Corners Property Trust, a REIT. And I guess my one complaint with Robinhood is that they don't have a great way of displaying this information, which is why I've compiled it here. So I think this is a really good way of showing it, and I'm definitely glad that I've gotten good at Excel and able to look at these different things. And as we can see here on the right, I have gone ahead and started to compile my dividends for 2020 and what I know I'm going to receive. After that, Agilent, 2 shares of that, so that was a decent dividend there, Charles Schwab, in August. And as we can see, really, my dividends started to pick up in September. So after that, we had Pfizer, 36 cents a share, 2 shares. After that, Microsoft, 46 cents. And then we really started to get into my bigger dividends as I invested more. So we have my Vanguard Total Stock Market ETF. Logitech was the next one. They pay once a year, so it is a pretty high dividend because they only pay that once. Now the next one that you'll start to see is PowerShares S&P 500 High Dividend Low Volume ETF. Actually, I think it's low volatility now that I think about it. But that one pays between 15 and 16 cents a month. That's the one that I commonly refer to as SPHD. Very affordable, pays a monthly dividend, so that's been a huge one for me. So as we can see in September, only had 4 shares. If we go ahead and look at the end of October, on that one I upped it to 8 shares. And I'm increasing my position there, as I've talked about in my other videos. But going back, Coca-Cola in October, 40 cents a share, 4 shares. Verit, my other REIT, paid 13 3/4, 3 shares of that. Four Corners Property Trust, again, 28.75 at 1 share. Then Agilent again. And really, as I go down that list, we can see that I'm starting to get a lot of these same players again. So SPHD, AT&T is a position that I've added pretty recently. Very high dividend there, so definitely something I'm looking forward to in the future. Charles Schwab again, Pfizer again. These are really more reoccurring dividends. Microsoft, Corning, KeyBank is a big one. Considering how small my position is there, that dividend is very nice. Coca-Cola again. Nintendo pays their semi-annual dividend. And then these last 2 I'm waiting on are my VTI and SPHD again. And as we can see, I've gone ahead and programmed this. A little bit complicated, but if you go ahead and look at the equation, this basically says that it reads the month. And actually, that's not reading correctly, so we'll go ahead and fix that now that I think about it. But this is something that like I said, I'm really glad that I've gone ahead and learned how to program this and use Excel to my advantage. So I have each month plotted out. So January, February, I didn't get anything. March, almost nothing. July July, I didn't have much. August, I didn't have much, and then at the end of the year, it picked up. So 2019, I have $20.74. So I think my goal for this next year would be dividends of around $100. Definitely would be a huge jump for me, but something that I think is both attainable and definitely a good goal for the future. So if you give me 1 second, I'll pull up my graph. Okay, and I like this graph because it shows my dividends every single month and basically what I was able to achieve. So as we can see, almost nothing in March. July a little bit higher, August lower, September a little higher, went down, but December, as we can see, much, much higher dividends. And this is really what I'm looking forward to in the next year, is increasing that. So definitely something to look forward to, and I think a reason to continue watching my channel if you like this. If you want to see more graphs like this, some more in detail stuff, I would love to do it, so please let me know. And now I'll show you, I guess, the dividends that I think, the companies that I think will perform well and have high dividends in the future. So here I've gone ahead and compiled a list of what I looked for this past year and what I'm looking for in the future in my stocks that are paying dividends. So on the left, I have positives, things that I want to go ahead and look for in those stocks. And on the right, I have negatives or things that I want to avoid in those stocks. So the first positive is I want to see a relatively high dividend. Now, clearly, this is going to differ depending on what kind of stock it is, depending on what company it is, or if it's an ETF. So again, if it's materials or even AT&T is a great example, because you're talking about a company that's selling cell phone plans, which are monthly, I can expect a much higher dividend out of them than maybe some other companies. Energy is a sector that typically pays pretty high, so I'm looking at gas stocks, and I have some of those listed here in a little bit. The second is room for growth. So what I mean by this is room for the company to expand and room for their dividend to expand. So one of the good metrics to look at here is their payout ratio, or what percentage of their earnings they're paying out. If their payout ratio is fairly low, this tells you that they have room to pay out higher dividends even if the company isn't seeing huge growth. Now the third is price under $100. A lot of this has to do with the fact that I'm a college student and I don't have a ton of money to throw in every week. So that $100 cutoff is something that I'm looking for. I think I'll be less lenient on that this year, depending on how much I work and how much I'm able to invest every week. Now, the last one is long-term value. And what I mean by this is stocks that I think have value and companies that will continue to succeed in the long run. This isn't a channel dedicated to short-term stocks. I'm not a day trader. I'm not a swing trader. I don't claim to be an expert, but definitely I'm looking for companies with long-term value. Now, things to avoid. The first is over-leveraged debt. Now, the big way that I see this is that companies, I guess, that are borrowing a ton of money, I don't see as having a great future or really having a high chance of success. The one caveat to that would absolutely be Vivint Solar. That's a company that I guess I've done some more detailed research on them. I've talked about them in the past, and I'm not super concerned about their debt. The second would be a negative earnings per share. So if a company is losing money, clearly I don't think that it makes a whole lot of sense to invest in them, and it's not very likely that they're going to be paying a dividend at all. Or if they are, that dividend might be cut pretty soon. Now the last is a high price. So this again goes with price under $100. I'm looking for fairly affordable stocks. And if a company is super expensive, I'm not going to be able to afford it. And this leaves me with Coca-Cola. This to me is the perfect dividend stock from all the research that I've done. Why? Well, here we can see Coca-Cola, current price of $55.35, so definitely in my price range. Dividend is paying 2.92% or $1.60 a year. Earnings per share is $1.80. When I say plus 169%, that is the quarter ending September 2019 compared to a year ago. And I've gone ahead and provided a little bit of additional detail here. So Coca-Cola is a dividend king. I've talked about this in the past, but that means that they have increased their dividend 50 years plus in a row. And that's definitely something to look for. Payout ratio of just under 31%, which to me means that they are capable of increasing their dividend. Johnson&Johnson is my second example. They've got a current price of $145.75, so a little bit high for me, but definitely not something to ignore. Now the dividend yield, 2.6%, decently high. $3.80 yearly right now. Earnings per share is up 805% since a year ago, which is awesome if you ask me. And then the details I provided there, they're another dividend king, and their payout ratio is only 23% right now. So a lot of room for growth in the future. Now ExxonMobil, $69.86, definitely within my price range. High dividend, $3.48 a year, or just under 5%. Earnings per share, $3.44, definitely good. That is down 36.76% from last year, but not something to be too super concerned about. Now here I've gone ahead and noted that in 2014 they had the second highest revenue of any company in the S&P 500. I think this is important to note because if oil prices do surge again, it could definitely be a good play in the long run. Now we've got Visa, $189.39, so well out of my price range, but definitely something I'm looking at for the future. Current earnings per share, $4.78. Dividend yield is $1.20 a year, and their earnings per share is up 20% on the last year. Now here it's interesting, their dividend's up 250% since 2015. Their payout ratio is not huge, so it's something that I definitely would like to get into in the future. Now the last stock that I pointed out is Disney, 145.70. Dividend yield is $1.76 a year. Earnings per share is $6.64. That is down on the year, but I think these details that I provided say a lot. Because Disney, it owns so much and they're diversified so much, they own Star Wars, Fox, Marvel, ESPN, ABC, National Geographic, and Pixar, including some other things that I haven't listed. I think that in the event of a downturn, a recession, or the company struggling, they're diversified enough to succeed in the future. So thank you for watching this video. Please like and subscribe if you'd like to see more content like this. And I'll be back with some more usual content here in the next couple days. Thank you.